Hey everyone, Bowen from Enhanced Asset Management here, just back with a little update today just on your direct share position in ALS. So ALS released their half-yearly results during the week, and I've just got a few highlights up on screen here for you to take a look at. I think the first thing that we'll start with that stood out to us and stood out to the market as well, ALS were guiding for net profit after tax for the half of between 150 and 155 million. They were able to report a figure of 158.4 million, which obviously exceeded this, and is probably a large reason that we've seen the share price appreciation over the past couple of days that we have. Revenue reported was at $1.28 billion, and I'll discuss the sort of breakdown of this in the next slide. And the other thing that we'll go through today is just this leverage ratio, which crept up a little bit for the half as well. So this is just a chart up on screen, just showing the revenue growth that ALS were able to generate for the half. And I've just highlighted this little box here which shows the organic growth, which refers to the growth that ALS were able to generate from their existing business. And that figure for the half was just 2.4%, which was a little bit on the low end to what we were hoping for and to what we were forecasting. However, we saw some currency movements which resulted in some pretty strong revenue growth, 3.5% here from currency exchange, and obviously 3.1% from scope growth, which refers to growth by businesses they've purchased. So that resulted in a 7.4% increase in revenue, which is in line with our forecast. However, we would have liked to have seen a bit more of the organic growth being a little bit higher. Now, I mentioned the leverage ratio before, so I've just got up on screen here the balance sheet from the half-yearly results. We can see a cash balance up here of 192 million, which is a strong figure. It's a healthy cash balance, but we have seen for the half these two figures here, loans and borrowings, which refers to obviously the debt that the business have. That's crept up to about $1.6 billion, and that results in a net debt figure minus the cash balance of around 1.4 billion. Now, obviously, with interest rates increasing that we've seen over the last sort of 12, 24 months, this obviously results in a higher interest cost for the business, which therefore weighs down a little bit on profitability moving forward. Now, ALS have had some good capital management and have fixed in a lot of their debt on pretty low rates. However, these will be coming off a fixed rate over the next 12, 24 months. So we will see a bit of an uptick in interest costs, which will weigh down on profitability moving forward a little bit. Now, due to this and due to the low level of organic growth, we've made the decision to start to exit our position. We've sold down a few shares yesterday, and we'll sell down a few more today, and hopefully exit the position entirely next week, as we look for something that offers a growth rate above the market level. The market tends to grow earnings at around 6 to 7%. With ALS, our forecasts are now sort of 5-6%, which are still okay. They're still, the business is still performing well in a good market, but it's just a little bit low in terms of how we want to add value to your portfolio. Now, I thought I'd just finish up on screen here with a little chart comparing ALS in the blue with VAS in the orange. So VAS is obviously the Australian Shares Index, which we hold a large weighting of our Australian equity asset allocation in, and it's where we fund our direct share positions from a lot of the time. So it's a bit of a benchmark for success with our direct share investments. We obviously want to add value to your portfolio over and above the market. So if we can beat this with our direct share investments, then obviously that's adding value and it's a positive for the portfolio. Now, since our initial position, we've seen that ALS has actually been able to outperform VAS, largely due to the share price appreciation we've got off the back of this update. This obviously doesn't include dividends, which we've received franked dividends from ALS over the last 12, 18 months since we've held the position. But being able to add some value to a portfolio here, albeit a small amount, it's always a positive. So we're pretty happy to exit the position here, and we'll provide some further updates with where we're going to be allocating that capital in the future. However, obviously, it's just sitting. It will go back to VAS at the moment and generate index returns. Now, as always, this is not financial advice. It's just information only. If you require any further assistance, please talk to your financial advisor. And I'll be in touch with you all shortly. Thank you. Have a good weekend.